Sean, the invest to live man. You had reached out to me on Twitter saying, just as I was breaking into my due diligence on Toast, saying that you had previously done a video. What did you say? This might be the perfect stock or something like this?
Yeah. Yeah. It's funny, and I appreciate you having me on, man. Obviously, you guys do a great job covering SoFi and in the fin space in general. So this is a great fit for the conversation. And yeah, you had made a post. You were just kicking off DD, and I said, hey, look, I made a video about this. It might be a great way to just take a step one to get an overarching feel for the company. And in a lot of ways, this is the kind of company and associated stock that I think people can get excited about that solves a really big, really specific problem that leads to really happy experiences for everyone involved. So that was my overall thesis for it, right? It's a really great place to start looking. No investment advice, right? I don't own the stock, but I think for me, it's a place I get excited about. I think it's a great company doing really cool things.
If I could present my screen and maybe we can talk about what the company even is, just in case this is the first time for anyone listening. They're a payment provider or point of sale payment processor for restaurants, whether that's takeout, whether that's in person, whether that's drive through. They try to do every point of sale, and then also back end helping with inventory, with staffing, with you know all different sort of things. They have 21 different products in the restaurant space, and it's seemingly like they're growing and taking market share. So I wanted to bring up this slide really quickly. Um, yeah, what do you think is Toast's ability to actually take over this market right now? They're saying they have $1 billion in annual run
Yeah.
rate. They think that they could possibly address 15 billion, and then going global. Obviously, it just gets massive.
So I want to bring us to almost even a broader perspective than even what you're showing on your screen. So when you think about the restaurant business, I think most of us are really looking at it as, you know, I go in, I order some food, and I have to pay with a credit card, and I take my food and I leave, or maybe I order online, right? And that's sort of the extent of what we think about with restaurants. But if you talk to restaurant owners and you look at the folks who are running the industry, the biggest things on their mind, right, are not necessarily just how they handle that credit card transaction efficiently. What they're really thinking about, where this TAM becomes so big, is they have to understand that we live in a current macro environment where inflation is all over the map, especially for food, and the logistics of getting fresh food to their locations is getting more and more costly. So I hear that, and the first thing I think to myself is like, okay, well, I need to find a way to really control and optimize food and pricing, right? And say, okay, well, who can help with that? Not sure. I wonder, right? Then I think, well, what's another major problem restaurants have? Well, right off the bat, it's going to be how do we find, qualify, and retain our talent, our staff, our servers, our cooks, our frontline folks. And
Right.
so I need a solution that can also sort of like bundle that in. And that's part of that TAM too. And even going deeper, when I think about getting away from that front office and the actual food, and I start to think like, you know, operationally, it's getting more and more expensive to run a restaurant because, you have minimum wages going up, you've got the cost of renting space going up, food is going up. So you need to be able to look at the totality of your operational perspective of the business. And then my fourth piece, and then I'll jump back to your point, is how do we also have like a complete view of our customers, our potential customers, our ideal customers, so we can really start to take action on all of that. And I think those are sort of those kind of points that got me really excited with the idea of what Toast was solving for, because I believed that at the time that I started really getting into these guys, there was a missed opportunity that people think that they're simply just providing, right? Like a little POS at a desk, I slip a card in, I call it a day, and that's the end of it. And to your point, it's actually quite the opposite. They run a massive integrated portfolio covering everything from front office, back office, reporting analytics, customer 360 and marketing, employee retention strategies, and capital strategies. So when you stand back and you look at all that, you're like, oh, damn, that's actually everything that restaurants are worried about in one platform with one person who can manage all that, or a team, of course. But, so that's what gets me excited about it, Tanner. Those are the things I'm looking at.
Yeah, and I think maybe we'll talk a little bit of SoFi maybe in the members video, but Galileo being the technology provider for SoFi, this is originally what got me into looking at Toast, is the payment processor for all of Toast hardware and everything that goes through their platform, which 2 years ago was at $9 billion of gross payment volume. I think today it's 27 billion.
Yeah,
Two
man.
years later, it's insane growth. this company is still expecting 30% compounded annual growth rates for their top line. Like, whenever I originally thought of in-person restaurants, I thought, okay, well, that cannot be a large industry. I've never been a fan of restaurants because they turn over really quick.
Totally. Yep.
It's not a business with high multiples. Um, but the actual payment providing and the supporting of those restaurants, you're not in the restaurant game. You're in the payment providing. You're in the technology game, and it's amazing.
It absolutely. Oh, I couldn't agree more. I think in many ways, when I think about Toast as a company, I think about really they're the Uber of the restaurant business, right? They're the Airbnb of the restaurant business. They're providing all of the tools to be successful in a low margin, high stress operation that will try to help to de-stress those things and deliver better results for them. And I think you nailed it what you just said, which is, you don't get excited about restaurants. I don't want to invest in a chain with 10 locations that has an identical chain next door selling the same burger.
Yeah.
I want to know who's operationally making them better, stronger, processing those payments. And that's really where this comes in for sure. The SoFi piece, of course, is a great connection naturally with Galileo. Um, I think about the fact oftentimes that there are few places where experience matters as much as a restaurant to a person who's going there. And the dichotomy of what was and what is has split wildly. And I'll bring this reality of how I look at it to the front, and I'd love to hear what you think about it. You go to a restaurant, maybe you got to wait in line for a few minutes, you get a table, you order your food comes out. Now that same restaurant has to deal with not only maybe the 30 or 40 people in the store, right, depending on the size of the store, but now they might be getting online orders, 25 a minute. You know, your local, I have a Chili's not far down the street from me, and they now are running like 3 restaurants out of their kitchen. I've got a Bertucci's in the other direction. They have 7 restaurants out of that one location that do online ordering and deliver only, including a Mr. Beast burger,
Yeah.
right? So whenever I go into these places, one of the things I always do is I ask them like, "Oh, what do you use for technology? What percentage of your business is people eating in and people taking out?" I do due diligence like old school. I ask tons of questions. I ask if I can see the kitchen. I want to see what handheld they're using. And you'd be totally surprised for the average person watching this. Like, people are happy to say, yeah, sure. You want to take a look? Sure, let's have a look. Or you say, hey, just curious, like, if you were thinking about how many people are doing takeouts versus how many people are sitting down, what's that look like? And when I think about 2 years ago, a year ago, last night, those numbers are changing, and it's changing at a rapid pace. And that means integrations. This means more complexity in the kitchen. This means more ingredients. Managing all of those things is a nightmare. And you're also dealing with customer service once removed. If I order that cheeseburger and you make it right away, it's fresh, it's hot, it's the way I want it, but that delivery takes an extra 20 minutes, who am I complaining about? The delivery driver or my cold burger that the restaurant did a terrible job on, right? And so there's even more considerations for how important it is to understand that fluid process of how do we now keep it hotter longer? How do we make it on the spot fresher? How do we tie into where that driver is in our own system? And exactly the point you made, right? This is not digging for gold. This is selling the denim, the shovels, and the backhoes. So, it's a pretty cool thing to look into.
So one of the things that I was kind of thinking about whether this is a bull or a bearish case, because as I was looking into some of the larger enterprise restaurants that they want to go after,
Hmm.
right? The
Hmm.
1,000+ locations type of players that really make up for the large bulk of the restaurants in general. And the way I was thinking about it is, okay, they are cloud native. The reporting, like, I think back to how franchises used to run back in the day. It's like I don't even know how they aggregated all of the reporting from every single restaurant from different management teams. It
Yeah.
must have been insane.
Insane. Yeah.
Now it's all cloud native. Toast is making this super easy. But then again, with some of these larger ones, I was doing just a little bit of due diligence on Dave and Buster's or Cheesecake Factory.
Hmm.
They own their own processors.
For sure.
So I wonder, do you think that they're able to actually get some of the bigger names, or are they too costly where some of the bigger names will do the R&D to get their own software out?
I think you made a call earlier about the fact that they do a lot of different things. So when you think about the way a company like a Toast, as an example, invests into this enterprise model, they might have processing at those larger restaurants. But the way that I really think about a Toast approach is they're trying to break this down into not only those point of sales or those processing, but like How do you run? How do you grow? How do you manage? How do you attract and retain? And then how do you capitalize? So my argument would be less on the fact of whether or not some large players are doing some of the things themselves, and more how do they do the other 95% of what that restaurant needs. And I think that both the TAM and the SAM are large enough that there can be multiple players who win at large multiples.
Yeah.
And in the case of the restaurant business, when you look at just the statistical numbers, which I'm sure you've seen these, right? Like it's actually pretty crazy. Just talking about the US alone, it's 860,000 locations, right? 22 million locations globally. It's a 900 billion plus, almost a trillion of total US sales from a GDP perspective, right? 4% of GDP. And they employ 12 million people. And I'm getting this right off of a statistical thing I pulled on restaurants. So my point is, even if they own a good sized chunk of the business, it's a mega chunk and there's a lot left over. So I agree with your point wholeheartedly on that processing. What I would say then is that processing then can integrate with their overall platform and provide that sort of data feed that drives the rest of the process for the value. Um, that's my take on it. And I also think there's not a lot of players who are doing this as specific and as direct as they are.
No, and I think I even compare it to like in SaaS in a way where there's a lot of large companies that could do what some of the larger SaaS players are doing, but the
So
costs in order to do R&D and everything like this is just not worth it to just go out and get a
yeah,
subscription with one of the larger players that will have it all ready for you in a matter of a month or so potentially.
totally. I'll tell you. I know we talk a little bit amongst ourselves. I work in the AI in the analytics space for a long time, over 20 years. I've built companies, I've sold companies, I work in for major companies. When we go in and talk about analytics or talk about AI, it is never really a conversation of like this vendor versus this vendor versus this vendor. It's really more of like a vendor or do it ourselves, right?
Right.
Clump them all together. And more, the specialization needed to have so many integrated platforms, architecture that is now outside the walls of the business. That need of a switch that can be turned on, that's custom built for the restaurant business with restaurant business terminology, build, focus. That's where the opportunity really lies. Because I love your question is so great for a number of reasons, but I want to call it the one that really comes to mind. It's very easy to think like, okay, what if I went to just a large scale vendor who does all of these things or could potentially consult and build all these things? The problem is you're going to have a product that now you need to manage the upgrades, you need to manage the fixes, you need to manage the change orders, right? You need to manage the change management in your own company to even do it and pay for it. It's very hard to budget, it's very hard to predict. When we think about something like ChatGPT and this whole generative AI piece, you might have just built the greatest AI product of all time yourself in your own company, and boom, now it's pointless because it's already outdated. It'll be outdated in 6 months and another 6 months after that.
Sure.
So I think this consideration for the small medium business from a restaurant perspective and the slightly larger, as well as these kitchen based providers, this is a flip a switch, turn it on, it's going to work, and I can add on as needed or subtract as needed to my contract. That's really the model of the modern world. You laid it out perfectly. I just to add some color. That's my take on it as well. Is there are going to be unique use cases where maybe I have a very specific model in my restaurant. So maybe there's a portion that I need to build custom. What I will tell you is when I got started in the early 2000s in tech, we would always joke like it's more valuable to bring duct tape than a consultant because a lot of times we're just tying this stuff together anyways.
Sure.
And I think that that's where a lot of these modern cloud enterprise companies are figuring it out is like, look, we can't be on the cutting edge of technology when our own internal processes aren't on the cutting edge as well. So there's an opportunity to both not only win against other vendors who aren't restaurant specific, but also win against a business model of like consult and build and reiterate every 6 months.
Yeah, no, I really like what you just said there regarding once you actually do build it, it's going to be out of date anyway. Like I remember whenever I watched your video after you sent it, and I was looking at the chart that you're showing, and they had 15 elective different products. Now they have 21.
That's
I
right.
think they just acquired a company to help with drive-through technology,
Yeah.
and so they're continuously expanding because they're focusing on it wholeheartedly, and that's pretty hard to compete with whenever you're trying to build it yourself. Um, I wanted to shift a little bit just to the actual company and stock.
Sure.
This company, from what I could gather, has $950 million worth of cash and $92 million worth of debt. They're not running a profitable business currently because they're just trying to land and expand and just grow a larger and larger market share. But they have a lot of cash. And now, from what I could see, and you tell me if I'm wrong, a lot of people are considering this a very expensive stock. It has a high premium to it, and I wouldn't disagree necessarily. But from what I could see, the smartest investors I've never seen. Well, I mean, let me do some digging on that. But you tell me of another stock that has nearly a 5% held by insiders and 84% held by institutions. I've never seen. I can't remember the last stock I've seen with held by institutions above 80%.
You
What
know,
like
yeah, go
that's
ahead. I'm
crazy.
sorry. Here's the thing, right? Like they're doing it right. And they're also in a space where there's very limited competition at scale. Like, let's be fair for a second. There is competition,
Yeah.
and I think there should be. There's plenty of room for competition when you're talking about millions and millions of potential locations to have a point of sale and everything that spider webs off of that into the back office, front office, hiring and capital. So from that TAM and SAM perspective, to bring it back to that for a moment, it makes sense why the opportunity is there. From a thematic investing example, it makes sense for me from an institutional perspective because it's not only covering tech, it's covering restaurants, it's covering innovation, but it's also supporting the Grubhubs, DoorDashes, et cetera of the world as they're becoming deeper integrated with them as well. What I would also call out is I promise I'm gonna get to the answer, but when you go to most takeout orders, if you look at the top line, it'll say like tab or toast tab dot the restaurant. Those are Toast's websites they've built for those restaurants.
Yeah.
So you're probably already, as a consumer watching this, you've probably used Toast products many times and had no idea you were using it. So I think institutions are seeing the fact that it's high priced if you compare it to a point of sale vendor. It's high priced if you look at it compared to someone who just integrates maybe third party ordering. When you put it together and you realize that they operate really in a duopoly across the US and the global acquisition strategy and opportunity is like, I forget the numbers I said a moment ago, but it's almost like a 10x bigger, right? So the
Mhm.
opportunity to grow at scale is huge. Your point is well taken, by the way. Not profitable yet, makes sense. They're still in growth. Um, and I would almost say like they're at a point where they're releasing products to become a complete solution. Actually, you said it right, 15 to 21, just in the course of what, several months, 6 months since I did that video, I think. So they're very much still on the trajectory of like hardcore growth, and I see this in a lot of ways as being like the everything app for an entire industry. And when you're building the everything app, it's going to take time. It's going to have some breathing room in your understanding of why you're investing in it. And it also means that there's risk. I think from an institutional perspective, they've got a huge successful team working at Toast building these products. Their go to market has been phenomenal. I think they understand also that distribution is hugely important. A lot of these tech companies in these early stages are very much still on the like, how do we blitz scale and market our way to success? Toast has an entire army on the ground knocking on small business doors, knocking on restaurant doors. That is a powerful thing when you're competing against those who only want to advertise digitally. And a lot of people are only doing it digitally, right? So that effort to put armies on the ground and add location by location by location by day, that's a very hard model to beat when your competitors are simply logging, throwing over emails and someone's walking in and shaking your hand. So just to call that out, that's a huge piece as well. The other reason why I think there's potentially an anchor, and I'm going to pause and say this again because it's sort of ironic as I'm talking about it. I do not own this stock, and I have no intention of buying it in the near term future, but not because of a negative reason. It's just not a fit to the way I have my portfolio set up. And I want to call this up because I don't want anyone to think like there's no like, here's why I think you should do something. I think you should do your own due diligence, but I want to make sure people really understand the way to think about these kinds of things. If you own Sean's barbecue shack and I've got 15 locations, once I have my point of sale set up, once I have my integrations with DoorDash, Grubhub, Uber Food, Uber Eats, whatever, and I've got my website up and running and it's efficient and working, do I really want to rip all of that out to save a few dollars a month with a different vendor who sells basically the same thing? Not really. So when you think about it, this is such a specific example of like such an industry and sector specific solution that's easy to use, works natively. We all are using it and don't realize it. It becomes very, very sticky. And
Yeah.
the more they add on, the more sticky it keeps getting. And then the beauty of this, which we didn't talk about yet, and I'm almost like giddy to talk about, as you can tell, they also offer capital and financing
Hmm.
for these restaurants. So when you want to get that new pizza oven, you want to expand to a new location, you want to add, you mentioned a minute ago, a drive-through window, you can actually easily raise capital. And here's the part that I think many will miss. When you're already on the platform and they can see what you're spending, your margins, how you're growing, you know how fast and easy it is to get capital when your capital partner knows your business as good as you do? It's like that.
Yeah.
And that's a mega value from an organic growth perspective. When your own customers are becoming bigger customers because of the value you're bringing directly to your bottom line. That's a huge win in my book.
Yeah, it's no different than Square or Shopify or any of these other positions that I hold.
Exactly right.
If you can see all the payments and how good the business is actually growing, you can take way better assumptions on the risk of the company if you're doing the reporting. So it's incredible.
Yeah.
Yeah, no, I'm not telling anyone to buy this company. Neither of us own the stock. I think this is just better as a spotlight on, hey, this is a company that I'm recently been looking into, and potentially if you guys want to look at it as well. But this is just for research, So why
Yeah.
don't we take it from there, and we'll go on to maybe SoFi. I'd love to hear your thoughts on that, and then potentially what else maybe you're investing in the markets. But we're going to take that over to the members only side. So, guys, if you guys want to do that, join below and check out Sean's links down in the description below. But aside from that, we're leaving you here.
Thanks, Tanner.